And that brings us to our speaker, Doug Griffin. Doug Griffin has been a senior marketing executive at AGCO for the past 9 years. Previously, he was VP of North American Marketing and Director of Sales and Marketing for AGCO's Challenger Division. In Doug's current role, he's responsible for developing global branding strategies and marketing initiatives for AGCO's 4 global brands. Doug began his career working for Caterpillar, where he had several sales and marketing assignments. He's a graduate of Purdue University. I knew there was something I liked about you, Doug. And he has a bachelor's degree in agricultural engineering. Recently, he was honored by Purdue as a distinguished alumnus of his college. Doug was also chosen to be a member of the Fellows Program sponsored by the Malcolm Baldrige Quality Award. And he does volunteer work, including Doug's been a volunteer for the Georgia FFA Foundation Sponsors Board and currently serves on the National FFA Sponsors Board. He also remains active with his fraternity, Alpha Gamma Rho, and he's here this morning to tell us a little about a global manufacturer that's headquartered right here in Atlanta. So please join me in welcoming Doug Griffin.
Thank you. Thank you very much. Good morning, everyone. Thank you for the introduction. I look at some of the past speakers that you've had at this event, and I'm wondering how I'm ever going to hold your attention. But I do have one topic to talk about that is near and dear to all of us, and something that we engage in probably 2 or 3 times a day, many days, and that's our food. And I want to talk a little bit this morning about AGCO, but I also want to talk a little bit about the AGCO's role in feeding a hungry world. I'll talk a little bit about our company and give you a little bit of history on that and share a little bit of some of our initiatives. But I also want to hopefully be able to share with you a little bit about this whole industry and the challenge that's in front of this industry to feed a growing world. So today we have about 7 billion people in the world. It's forecasted by 2050 that number will be about 9 billion. So not only in the next 35 years or so are we going to have to feed an extra 2 billion people or so, but we also have people that are improving their diets. We have people in many parts of the world that have never had the ability to buy food before. They've only been able to eat what they could grow on their farm, which would be rice or wheat. And now in areas like China and India and developing countries, these people are now realizing things they can buy for them to eat, such as meat. And as they move up the food chain, the amount of protein they're consuming, the amount of protein required to provide that meat is increasing. So not only do we have 2 billion more people to feed, but also the amount of grain and the amount of protein that must be produced is increasing even faster than the amount of people. And then additionally to that, we also have a Western world that is very focused on decreasing our dependence on foreign oil. And so there's a significant amount of effort and focus going into the biofuels world. And as we see that also takes some of our production, some of our land out of production to go into uses such as biofuels that might have been used for food in the past. So I guess maybe that's the challenge. The good news is there's a lot of technology being developed that is able to significantly increase the amount of output that can be produced today. And AGCO plays a big role in some of that technology that's being produced to be able to do that. And then another big opportunity is that there's a lot of land out there that's not being used today to grow crops that could be used. And one of those areas, and I'll talk a little bit about the different areas, but one of those areas is Africa. And AGCO believes that we can play a big role in educating and in bringing equipment to producers in parts of the world like Africa to grow more crop. So challenge on one hand, producing more food, producing more biomass to produce biofuels, opportunities, lots of technology, lots of land, lots of education in certain parts of the world to increase the production. So let me tell you a little bit about our company to start out with. In 2010, AGCO was about a $7 billion company. I think in 2008 we were at about $8.2 billion, and definitely 2011 is going to be a number significantly north of $6.9 billion with the significant strength we see in the agricultural market this year. But we're a pure play ag company. When you look at our competitors are companies like John Deere. John Deere is a big ag company, but they're also in the construction business. You look at a company like CNH, which is owned by Fiat. They're in agriculture, but they're also into a lot of other businesses as well. AGCO is somewhat unique in that we are a pure play agriculture company. So everything we do, everything our CEO thinks about in relation to his job, in relationship to his performance, is related to agriculture. We have a full range of products and services. I'll talk a little bit about that. We also have a portfolio of brands. For those of you that aren't real familiar with AGCO, I'll back up a little bit. We were formed in 1990. We're not a very old company. We were formed through a management buyout of the agriculture division of Deutz out of Germany. And in 1990, we began a quest of acquisitions. And over the years, we've made 23, 24 plus acquisitions to the point today that we've gone from a very small company in 1990 to a company today consisting of 4 global brands. And I'll talk a little bit more about that here in just a second as well. We're well positioned in growing markets. So for most of us here in the room, we're very familiar with probably a company called John Deere that dominates the North American marketplace. AGCO is a number 3 player here in North America. A number 3, but a rapidly growing player here in North America. In South America, we're number 1. We dominate South America more than John Deere dominates North America. And in Europe, we're number 1, number 2 in most countries in Europe. So one of the big opportunities for growth in North America, which is a mature marketplace, but yet we have significant opportunity to increase our share of market in North America. We have about 2,600 independent dealers in about 140 countries that we sell our product through around the world. And if you look at our split in sales, Europe, Africa, Middle East represents almost half of our business in 2010, and it will look similar to that again in 2011. North America is 22%, South America 25%, and the rest of the world is about a 4%. So you can see we're very heavily dependent upon the European marketplace today. But we see significant opportunity in this rest of the world, and I've got some slides to talk about that. We see significant opportunity for share improvements in the North America market. And in South America, our strategy in South America is to grow, but most importantly, hold on to the share that we have down there and maintain our dominant position in South America. Our 4 brands, some of them you may be familiar with, some of them you may not. Challenger is a brand that we actually acquired from Caterpillar. We acquired that brand in 2002. That's actually when I came over to AGCO from Caterpillar at that time. And that brand is Challenger. We still sell that primarily through Caterpillar dealers. And we still paint the machines Challenger or Caterpillar yellow and market them very much in line with the Caterpillar brand throughout North America. Fendt is a company that we acquired that's headquartered out of Germany. It's a leading technology brand, a very strong player in Western Europe, and dominates the German marketplace as well. And then one that is probably the most dominant name and one that most of us are familiar with is Massey Ferguson. Massey Ferguson has been acquired, one of our early acquisitions, and one of our global brands today that we sell everywhere in the world. And it's the number 1 tractor volume selling brand in the world today. Some of that's through some licensees in areas like India. We've built several tractors in areas like Turkey. But Massey Ferguson is probably one of our largest brands today on a global basis and dominates South America along with the Valtra brand. It's very big in South America and also in the Scandinavian countries. This was an acquisition made in about 2004 timeframe. So that's our brands, but the ones you see here in North America primarily are Challenger and Massey Ferguson and a little bit of Fendt here in North America for those of you who've been in the agricultural marketplace here. So, we know agriculture, we know farmers, or we support the farms, and we help feed the world. That's our tagline. That's what our mantra is, and that's what we drive our business by. As far as global locations, I know there's a lot of dots on here, and you certainly can't read the words at the bottom, but the dots represent everywhere that we have a location around the world. So you can see that we're represented in China, we're represented in India, Singapore, Australia, South America, North America, very strong presence everywhere around the world. I mentioned a little bit that AGCO has been formed over the years through a series of acquisitions. So if you were to look at AGCO throughout the 1990s, you would see a company that basically put most of their capital and most of their efforts into acquiring other companies. So in This, since about the year 2005, 2006, you can see that our investment in R&D has increased significantly. We've gone from a company that has grown through acquisitions to a company that is growing through investments in R&D and organic growth. Even to the tune of back here in 2002, 2003, we were investing about $57 million, $71 million into our annual research and development budget. This year, you can see that, or in 2010, that number topped $220 million, and this year that number is growing at a 10 to 15%. So we are significantly increasing our investments in research and development, significantly improving our product lines, and significantly increasing the technology that is on those products. This is just an example of some of the products that we have, and I just wanted to share, for some of you who have not been close to agriculture, I want to share with you some of the technology and some of the applications these machines are used in today. Take a combine, for example. So a harvesting combine today, it's not uncommon to see a combine. We'll use a crop that we're familiar with here in the U.S. called corn. Okay? It's not uncommon to see a combine with a 12-row head on the front of it, which would be a 30-foot wide corn head going through the field at a speed of 4 or 5 miles an hour. So you may say, okay, that's interesting. But think about this. When you look at the number of plants of corn that it's harvesting and the number of ears of corn, so we're all familiar with an ear of corn, right? So these combines can take about 250 of those ears of corn per second, process it through the machine, put all the plant material out the back of the machine, put the grain into the grain tank with about a 2%, maybe a 1% level of loss out the back of the machine. So it's not quite Six Sigma quality, but a combine can generate 250 ears of corn per second through the machine. So very highly technology advanced machines. And all the while, it's monitoring the moisture of the crop that's harvesting. It's monitoring the yield that it's harvesting. It's mapping that on a GPS map while it's driving through the field, and it's storing that data so that when the farmer goes in to decide how much fertilizer and how much chemicals to apply the following year, he's got that data, he knows what his field can do, and then when he's doing his operations the next year, he uses that yield data while the combine's operating. These tractors, we drive through the field now using satellites with up to 1 centimeter of accuracy through the field. So used to you would see, and you still see this a lot, but you see large pivot irrigation systems, spraying water out to irrigate the ground. And there's lots of evaporation that takes place. A lot of water is wasted in that process. But now you can actually take irrigation tape and put it in the field, in the dirt, under the ground perhaps, or close to the ground, and you can drive the tractors with 1 centimeter of accuracy and know that you're not going to plow up any of the tape that you've got in the ground using satellite technology to do that. And then some of these tractors as well, you're collecting all that data as you go through the field. We have Bluetooth capabilities. As you drive close to the shop, the Bluetooth automatically picks up the Bluetooth on the tractor. You download the data on the farm computer, and all that information is transferred automatically through Bluetooth technology. So it's becoming very technology advanced. These machines here, these are our crop care products. They actually do a lot of the crop care products application in the field. Technology on these machines, things we're looking at are things like weather stations on board. So as they're driving through the field, they're constantly recording temperature, humidity, wind speed, and they're making adjustments to how they're applying whatever product they might be applying at the time based on the weather conditions at the time as they're driving through the field. We're looking at technology that can actually use imagery, either through cameras or through satellites, to look at the health of a crop by how green the crop is, basically. The greener it is, just like your plants in your house, the greener it is, the more healthy the plant is, which then determines how much water, how much fertilizer that plant needs, and we can adjust things on the go using imagery, using satellites. So it's becoming very high-tech equipment, very technologically advanced type of machines that these producers are using today. So the days of the farmer having a couple hundred acres and going out and applying, going out and farming a couple hundred acres and having a few cows and a few pigs, those days are mostly over. Many of our customers today, may farm 30,000, 40,000 acres. They may have an HR manager as part of their staff. They have a CFO as part of their staff. They have a purchasing manager as part of their staff. They spend their days sitting in the office managing things. They never even see the tractor or combines in many cases. So the farms are very quickly evolving, very quickly growing and becoming very large, high-tech operations. So AGCO, we also, along with those brands, we also have some of these what we call supporting services, where AGCO Parts, AGCO Finance, where we provide retail financing for our customers. AGCO Sisu Power is our engine division, located in Finland. We have AGCO Academy, which is our training division for customers, for dealers, as well as our internal employees. AGCO Service, AGCO Advanced Technology Solutions, that's a division of our company focused on all of this technology that I was speaking about on the previous slide. I'll tell you a little bit about the industry where we play, and I've talked a little bit about it already, but a little bit more about the industry. So how many people in here are aware that commodity prices are increasing? Raise your hand. Absolutely. Commodity prices are increasing. Why are they increasing? It's basic economics, right? Supply and demand. Supply and demand. So I spoke about what's driving some of that demand, right? China is consuming more grain than they've ever consumed before because their standard of living is increasing. Protein levels are increasing. They're buying corn from the U.S. in larger quantities than they ever have before. Also, we're using a lot of our crops also to help support the biofuels industry. That's driving increased demand. We also have a very weak U.S. dollar right now, right, which is driving the attractiveness of some of the grains we grow here in North America to be sold in foreign markets. But look at these charts here. We got corn, we got wheat, and we got soybeans. On the left-hand side with corn, if you look back from 1985 through 2010 at the stocks-to-use ratios. In other words, how much corn, how much beans, how much wheat is out there compared to how much is being used. And you can see why the prices of these commodities are increasing. Number one, we're using a whole lot more than we ever used before. And number two, there's a lot less out there than what there has been before. There's less being stored. There's less being available. You can see here on corn, its ratio in 2010, that number's actually gone slightly lower in 2011. Wheat, same way. Soybeans, same way. Wheat's not quite as bad. If you remember in 2008, there were riots around the world and wheat prices got extremely high. You can see how low the stocks-to-use ratio on wheat got in 2008. It's not at that point anywhere near it today, but if you look at by historical standards, it's low, and same way with soybeans. So increased demand, increased use, less stocks, price goes up, right? So here's what we're seeing. If you go back here all the way to 1990, back to 2010, where we're at today, and you look at where we're forecasting this to be, we believe these commodity prices will remain higher than they have been historically. Will they remain at the prices they're at today? Probably not. But will they certainly remain at levels higher than they have been historically? Without a doubt, believe they will. So you look at soybeans, just to give you an example on soybeans. So this chart shows soybeans at 10 bucks. Soybeans today are right at about $14 cash. So they're really up here right now. Wheat is higher than what it is today. Corn as well. Corn we show here on this chart at around $4. Corn today is around 7 bucks, 7 to 8 bucks. And some people are forecasting we could see $8 corn before harvest is over this year. So significant increases in commodity prices. That's driving a lot of changes out there. Land prices all across the world, but especially in the U.S., land prices are increasing rapidly across the Corn Belt, across many areas that grow these grains. We see increased competition among farmers fighting for that land. We see cash rent prices going up significantly, and really see some big increases there. But anyway, this is what's driving our business right now. Net farm income. Actually, I've got a chart on that. If you look at net farm income, in other words, how much net farm income is the U.S. farmer making as a sum, and you look at in 2008, if you recall, things were pretty good then for agriculture as well. That number was $89 billion was U.S. net farm income. We did see a drop-off in 2009 down to $62 billion. It wasn't so much driven by drop-off in grain prices. It was more driven by input costs went way up that year. But now we got $79 billion was where we finished 2010. 2011, USDA actually just changed that number. Instead of being $95 billion, they're now saying about $105 billion for 2011. So we got a number about right here for 2011 net farm income. If you do an average, back here in 1995, the average is down here somewhere. So the amount of net farm income the agricultural industry is seeing right now is very, very high. And that's been very good for our business and been very good for most of the people that do serve the agriculture segment in some way. So let me just real quickly talk a little bit about AGCO Strategy. And I want to finish up early enough because I'm hoping there'll be some questions and discussion here when I'm done. But a little bit about AGCO Strategy. as I mentioned before, AGCO was a company of acquisitions for many years. And for about the past 6 or 7, 8 years, 9 years, we have been growing ourselves organically. And we've been very focused on this return on invested capital. It's very tightly tied to shareholder value. No rocket science here, but what are we doing? We're spending a lot of time growing our revenue through increased market share and going to new markets like Africa, like Russia, like Brazil, of growing some presence there. We are also being very successful in improving our cost base, and I'll talk a slide or two here on that. And then we continue to work on our, this side of the equation as well in the level of invested capital we have in the business. But I want to talk a little bit about a couple projects, a couple things we're doing. One of the things that we're doing and we think is critical in business today is to be able to have the flexibility to have a common platform tractor, a common platform product that can be built anywhere in the world. As currency changes, as industries change, as things change around the world, we have the flexibility to be able to shift production around or change things on how we build that product. So this project we call Centurion Project is a tractor range that's basically taken all these tractors you see across the top of the slide and putting those onto one common platform and giving us much more manufacturing flexibility with that product. Another example is a material cost improvement we call Global Purchasing Initiative. Because we had been a company of acquisitions for so many years, we had many different purchasing departments. We weren't necessarily coordinating our purchasing efforts, and we were missing out on a lot of opportunities to leverage ourselves with our suppliers. We estimate through this initiative, and you can see all the different areas we're working on the left-hand side of the slide, but through this initiative that we can realize over $40 million a year of savings just through some very focused global purchasing initiatives. Some of that will come in the means of best cost country sourcing. This is a cumulative slide here, but we believe by the year 2013 in our strategic plan that we can save nearly $175 million cumulative dollars through best cost country sourcing. So we have teams of people placed all over the world now. Obviously very strict quality standards as we look at best cost countries, but we definitely are looking at a lot of best cost country sourcing today. And engine sourcing. I mentioned this a little bit earlier, but we, in the early part of this decade, we bought a company by the name of Sisu Diesel, and we have now started integrating those engines into our own products, where we're now using an internal captive engine, and that is being about 50% of our business, and that number will continue to increase as we go forward. 50% of our products will have this Sisu Diesel engines as a part of our machines. So developing markets. I wanted to get to these slides and make sure I had a little bit of time to talk about this. So in Russia is one of the areas we're looking at is definitely an opportunity for us in developing markets. There's not a lot of land in Russia that's not in some type of agricultural production, but there is certainly an opportunity in Russia for an increased level of technology and an increased level of mechanization for the farms in Russia still today. Market remains weak due to credit constraints and a bad harvest, although that is continually improving. 2010 was a really rough year for the Russian market, but we are seeing some improvements in 2011. But the credit situation almost just locked up that market in 2009 and 2010. AGCO Strategy is focusing on continued growth of our existing import business, and we would also are in the midst of establishing a combine and tractor assembly plant there and doing further distribution development of adding dealers and more dealers in that area. China. We see two big opportunities in China. One, of course, is some of our best cost country sourcing initiatives. But more importantly, the domestic market in China is a significant opportunity for us. So what have we been doing? We see we're actually growing our import business. So today we import some product into China. But we also are establishing domestic production. I've got another slide here in a minute that shows where those factories are at. We have 2 factories now in China, and we have also acquired a combine factory or a combine company in China as well to increase our presence in China. So we see this as a big part of our future growth strategy. Excuse me. Okay, thanks. Sorry about that. India. India is an area that interests us quite a bit as well. We have a partnership in India today. We have a 23%, 24% ballpark ownership of a company by the name of Taffy. Taffy provides us with an opportunity for very large participation in the Indian market. They're a very big player in India. We also use Taffy to manufacture some product for us that we sell in other parts of the world, including North America. So that's our sourcing of the finished product. It also gives us access to other emerging market suppliers, engine suppliers, parts suppliers, casting suppliers, so on and so forth. So this partnership with Taffy is very important to us. As a matter of fact, the CEO of the Taffy organization serves on our board of directors as well. So that's a great opportunity for us to be more involved in India. In Africa, this chart on the left-hand side of this page shows the amount of cropland that's available for production that's not being used today and where that cropland is located at. So at the very beginning, I mentioned one of the opportunities is the fact that there's a lot of land out there today that is not growing crops that could be used to grow crops. Surprisingly, and a lot of people don't realize this, Russia is not a big number. A lot of people say, oh, there's all this land in Russia. And yes, there is a lot. There's a lot of land in Russia, no doubt about it. But the opportunities for more land to be put in production comes out of Africa, Latin America, and then Russia and some of the Eastern Bloc countries would be in this other block. So AGCO views Africa as a big opportunity for us and one that we want to focus our growth on going forward. You can see the countries down here below where it's at. It's located all throughout Africa. We have actually just opened a training center in Africa and increasing our staff levels there. And this is a place that we think we have opportunity and for education. There's a lot of people trying to farm that land in Africa today, but they don't have the equipment. They probably don't have the capital to invest in the equipment, and they don't have the knowledge on how to grow, real production agriculture. Just a quick slide. So we're on a tear right now of introducing new products. We're probably introducing new products at a pace today that we've never seen before. I'm sure we're introducing at a pace we've never seen before. And this will continue going forward. This is being driven by two things. It's being driven by, one, the marketplace's demand for better products and our interest of being involved in a bigger part of the market. But there's also some very strict EPA regulations, many of you I'm sure have heard about, called Tier 4, that we're going through right now that requires significantly lower engine emissions, diesel engine emissions, that we are updating all of our equipment to meet those standards. Everyone through the industry, everyone through the diesel engine industry is going through that today, whether it's farming equipment, construction equipment, or over-the-road trucks. But you can see that in this slide, over the next 4 years, or including 2010s, the next 3 years, 47 new products on the tractor side, 24 new products on the combine side, and then there's other products in addition to that. We have planters and hay equipment and so on and so forth. So significantly rapid pace of new product introduction. This slide I was mentioning about on China. So 2011, we are investing about $200 million over the next 4 years into the China marketplace. We've opened a high horsepower tractor assembly plant up here in Deqing, and I probably pronounced that incorrectly, but Deqing. We have a low horsepower localization in Qingzhou, and then we also, as I mentioned, have just purchased a combine harvesting factory in China as well. So significant interest in the domestic China market for our growth strategy. And just a quick summary of our finances, not to spend a lot of time on this, but to tell you a little bit about AGCO's finances. This year, we're off to a significantly strong first half of the year. Q2 2011, we had net sales of about $2.3 billion, up 35% for the same quarter last year, and on a year-to-date basis, up a similar amount there as well. On gross profit, up 52% for the quarter and up 54% year-to-date compared to last year. So far this year, we see significant strength in our business, and we see that strength continuing second half of the year as well. Operating margin, just on the right-hand side of this slide, June year-to-date, so this would be our operating margins gone from 3.5% on a year-to-date basis in 2010. We were still going through a little bit of destocking the late part of 2009, early 2010, up to a 7.4% operating margin year-to-date this year. And we announced these earnings back in at the end of the second quarter, and I think our stock went down 3 or 4% that day. But anyway, for various other reasons. But the business is good. The agriculture sector is an outstanding industry to be involved with. Big challenges in front of us, big opportunities in front of us, and it'll affect every one of us, in some way or another. So it's about 8:20 right now. I think it's supposed to be done at 8:30, so I want to leave a few minutes for questions. So I'll open up the floor, and I think we use microphone, correct?
That's right, yeah. If you haven't been here before, we do a broadcast of this on a website afterwards, so it's important that you get a microphone. If you want to ask a question, just raise your hand. We'll bring one over to you, and thanks very much for that fascinating and very optimistic presentation. Nice to hear a business doing well these days.
Thank you. Yes?
Yeah, I just had a question about your net income figure for the farmer.
Yeah. Yeah.
Was that net after operating costs like fuel costs and whatnot?
Yeah. No, that is a net margin, net farm income. We also look at gross cash receipts as well. Gross cash receipts are up a little bit more than that because input costs are up. But that is I can't find it here. But anyway, that's a net profit number.
Dollars get over 100 or something.
Yeah. Significant amounts of increases in income into that sector. Other questions? Yes, right here.
Thank you. Obviously, your profits and your sales are tied directly to commodities, correct?
Tied very closely to commodities.
Okay.
Yes.
And so if we see some sort of flattening out of, inflation and the commodity prices, how are you guys planning on adjusting for that?
Yeah, that's a good question. A lot of the key will be on how well producers have done on protecting themselves for commodity swings. Many of them are writing variable contracts on their cash rent for land. So in other words, they're tying the cash rent that they'll pay for land to the price of corn or the price of beans to help protect their net income some. But if we see a significant increase or a significant correction in commodity prices in some way, it will affect net farm income and it will affect the amount of new equipment that they purchase. So we spend a significant amount of time in our forecasting of really looking at commodity prices and what we see. And like I mentioned earlier, with short of some sort of major problem in the world, we don't see a major correction coming to commodity prices. We're going to see some ups and downs. Honestly, right now, if anything, there's some concern out there that if commodity prices go higher, that it's going to starve out some of our domestic consumption, some of the large livestock operations, perhaps even some of the ethanol plants will shut down, which will then cause us to be more dependent upon export for commodity prices, which will create more volatility in the markets. So really, there's many people today that say, you know what, we really don't need any higher commodity prices today. We need steady commodity prices is what we need. So, yeah, question? Yep. Right. So I didn't come prepared to talk the details on RIC, targets and numbers and all that. And I also have to be careful how much I do talk about some of that. Have we seen softening of the business, though? Today, no, we have not. If this uncertainty continues and the swings up and downs and all that, will it have an impact? I would guess at some point it will. But at this point, our order boards are extremely full. Our factories are producing just about everything they can produce in many cases. Sometimes we're waiting on suppliers more than we are on having labor or capacity within our plants. So at this point we have not yet, but certainly if it continues, we'll start seeing something. So, yeah. Yes, question here? Or I'll let you run with the microphone. Okay.
Doug, thank you. There's been a lot written and a lot of concern about the quality and the safety of the food supply. And in your research budget, are y'all addressing that? Is there anything that you're doing to alleviate that concern?
Yeah, absolutely. There's some really neat things going on. One of the big things you'll hear people talk about within the farm community for food safety is identity preservation. In other words, so that if you go to Kroger and you buy a gallon of milk, that it has the capability to be traced all the way to exactly what farm it came from, or exactly what cow it came from, exactly what day that milk was came from that farm. Same way with grains, being able to identity preserve where a certain batch of grain was grown and how it was grown and what the conditions were. And that's one of the things on this this weather station I talked about, is really being able to know conditions that were present and storing that data and preserving that data. So yeah, there's a big effort on identity preservation and being able to traceability of where a certain product came from, so that if there is ever a problem, it can quickly be traced and quickly be resolved. So yeah, there is an effort on that. Yes. Here's a question. Or there's one back there. Yes. Okay.
You talked about opportunities in Africa, and I've had some colleagues that do a good bit of travel in South Africa, and they talk about the fact that at one point, not too many years ago, Zimbabwe was the breadbasket of Africa, and because of the political changes and disruption that was going on there, essentially all the sophisticated farming operations have left the country. And you probably know a bit about that.
Right. To answer the first part of your question, yes, we see the same thing that you see in Africa, of many of the formerly very productive regions, due to political unrest and political problems, not being as productive today. We see that as an opportunity. To answer the second part of your question, the answer would be absolutely yes. As we look at our future, we have to become a company not just about building tractors and combines. We have to become a company about how to help producers be more productive. And that may not just be providing them with a tractor or combine, but it will be providing them with the technology and the training to do that. So. Yes, to answer your question, if everyone couldn't hear, so the opportunity for graduates to be in from like the MIS fields or whatever, to be involved in more things than designing and building tractors and combines, absolutely. To me, one of the most exciting things, I've been in the ag industry my entire life. I grew up on a corn and soybean farm. My degree is ag engineering. I was in Alpha Gamma Rho fraternity, which is an ag-related fraternity. I've been working with ag products my entire life. But to me, one of the neatest things about what's happening in agriculture today is that the industry is being truly recognized as one of the most attractive industries to be a part of. We're seeing that we have interest from people, getting involved in agriculture that, are, no different than getting involved with Microsoft or getting involved with companies such as that want to go to work for AGCO because they want to be involved in agriculture. And the opportunities to be that solutions provider versus someone who just builds tractors and combines, but to be a solutions provider opens up all kinds of technology, like all the technology I talked about earlier, of systems management, of data management. So without a doubt, it does. Okay, there's one. There we go. This lady's got one.
You talked about reducing emissions in the fuel that you use. I wonder where you were with the use of biomass now and in the future.
Yeah, so as you know, there's a lot of ethanol used in the country today, and most of that ethanol comes from corn, right? So there's, of course, a lot of debate about whether or not that's the best use for corn. As you see the use of ethanol expand, as you see increasing blend ratios being put in place, a lot of that ethanol is going to come from cellulosic ethanol or ethanol produced from biomass. There are some companies that we're working very closely with on ways to produce different types of crops to create more biomass for cellulosic ethanol production. So instead of taking corn out of production and use for ethanol, the growth of ethanol is going to come more from things like switchgrass. In Brazil, sugarcane is used, a huge part of sugarcane crop goes to ethanol production. So absolutely, we're looking at other sources besides grain.
What about your own equipment?
Yeah, yes, there are opportunities for own equipment. That's the company we're working with on biomass. They want to learn how to use biomass, but they don't necessarily have the tools to grow it. We've got the tools to grow the material, the crop they want to grow, and how to handle it. It becomes a significant logistics issue because there's large quantities of biomass, of plant material that have to be handled. So it's got to be baled, it's got to be transported, it's got to be cut, and all that. And that's what, we have products that can help do all that.
Okay, we've got time for just one or two more questions. So. Okay.
Go ahead. I'll let you go first. Then.
I have a question about what happens to all these old tractors. I mean, people are buying all these new tractors, and farmers are encouraged to have the latest, greatest. But I had the opportunity about a month ago to be at an equipment auction in rural Alabama. And, I mean, it was amazing to me the number of lovely tractors that were available because people are getting new things. Is there an opportunity for philanthropy to get these old tractors to developing countries?
Definitely a lot of the equipment that does become aged does leave North America to go to some of the other countries. Especially today with the weak dollar, we see a lot of equipment after its first use leaving the country. So that's one thing. The other thing I think is manufacturers, we have to be more, so I mentioned some of the size of this equipment that's starting to be used. And when you look at the size of that equipment, there's not necessarily a secondary farmer out there waiting to buy a combine that, the size of the equipment that I talked about. We've got to be smarter about how we design our equipment so that we can go in and rebuild it. To easily go in and update this and change this and put it back out in the field as a like new machine, maybe put a new warranty on it and put it back into use again and get additional life out of that product. That's some of the things we're looking at on our equipment. Right.
We follow.
I'll repeat the question.
We follow Nestle very closely, and I was reading an article in relation to the CEO and his stance on GMO foods, genetically modified foods, and what they're doing to Africa, meaning that Europe won't buy food from Africa if it has any genetically modified food in it. And I was wondering, how does that, how do you guys deal with that situation, and what's your stance on it?
Yeah. Well, I mean, they're the customer, right? So you got to do what the customer wants. You got to do what the customer wants. I think a big part of it is education. I think we've got a lot of education of the public to do on, okay, are there really any risks associated with GMO crops or are there not? We need to educate. We need to train. I can tell you this, if we're going to feed the growing world, we have to use GMO crops. So it's an education, but in the end, they're the customer, and you got to supply what the customer needs. So, yep.
Okay, thanks very much, Doug. Just a minute.
Okay.
And on behalf of our alumni board, I want to present you with this glass sculpture created by a local artist, Loretta Eby. So thanks again, Doug.
Thank you. Thank you very much. Thank you.